Hello everyone and welcome to the NinjaTrader Ecosystem webinar room. My name is Juanita Archuleta and I work here in the Denver office. We have a very special event for you today with RJ Jimenez of iCinDER Trader. I would like to mention it is important to understand that there are substantial risks in trading commodity futures contracts and Forex. You should carefully consider whether such trading is suitable for you and will depend on your specific financial resources. It is possible to lose all funds deposited with your broker and could even incur losses beyond these amounts. Please inquire at the following link for more information on the CFTC full risk disclosure. Also, remember that these training webinars are not a solicitation nor recommendation, but simply educational in nature. This presentation is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Any NinjaTrader brokerage-related questions should be sent to the following email address or the following phone number that I have just listed. With new tools added nearly every day, NinjaTrader ecosystem is home to hundreds of apps and services. You can quickly and easily find the tools or services you are looking for with a simple keyword search. You'll also find information about upcoming webinars and an on-demand video archive of previous events. Also, if you are active on social media, we do highly recommend that you follow us on Twitter and Facebook. I'll go ahead and put our handles in the room right now for those of you who want to get all updates NinjaTrader ecosystem. NinjaTrader is always free for advanced charting, strategy backtesting, and trade simulation. To ensure you are on the latest version of NinjaTrader and to pick up a free live data trial, please use the following link. If you are interested in purchasing or leasing NinjaTrader, please use the following link. And if you are just getting started with us, we offer free live training on a daily basis. You can you can review a schedule of the weekly webinars we have using the following link. We're very excited in this unique event in which RJ will explain market direction, velocity flow, volume force, and other ways to find trading opportunities. Thank you again to everyone here in attendance, and without further ado, it is my pleasure to welcome to the NinjaTrader ecosystem room, RJ. Go ahead and take it away, RJ.
Thank you very much, Juanita, and thank you for all you who are participating here in this event. I want to thank NinjaTrader for this opportunity to actually show the tools that we presently have for trading. So I'd like to show the disclaimer, and this was covered, but I would like to cover just the first piece. iCinDER tools are indicators that should not be used solely or as a replacement for your current tool set. All projections are hypothetical, and they are only used for educational purposes. This family of tools is an addition to those that you may already be using and can provide additional information during your analysis of financial instruments. And CFTC 441, hypothetical or simulated performance results have certain limitations, unlike an actual performance record. Simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or understated compensated values of impact, if any, of certain market factors such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those that may be shown. So just go down now. Let's cover a little bit about me. And I have been trading since approximately 1990. First and foremost, I am a trader. I'm also a developer of software for traders. My background is in business administration and computer information systems. In the 1980s, that's when I first became involved with computers, and at that time, I saw that computer could facilitate analysis of processing of information, but at that time it was in accounting systems. So my first business was in consulting and promoting the use of computers in business environment. As part of this, I developed software for financial reporting and payment processing. In the early 90s, that's when I took my first steps in trading. Just like most of us have done, we end up with outcomes that sometimes we have winners, sometimes we have losers, and we find that a lot of our time is actually searching for those indicators that will kind of try to give us an edge or give us better analysis so we can make better decisions in our trading. So this is just something that happens to the life of our business in trading and also as a profession in trading. So by 2006, I had coded methods and analysis methodology into the indicators that I could use in my own trading. While developing the indicator suite, I continued to spend time reading and finding about markets and running a number of analysis tools and developing further modifications on the product. So today we have a suite of indicators, and they can show us trend direction, market strength, and the main key piece behind it is to take data and visualize it in a manner that we can easily understand and at the same time use in our trading. So the agenda today, we are going to cover volume as a market force of price. To understand the effect of volume on price, I am going to introduce a bar type that will help with visualization of market price movement, which by default implies the sentiment of the market players as they move the market. So a key thing to understand here is that volume moves price, price direction and magnitude or change in price can provide us with a trader's sentiment at a point in time. The iCinDER technical indicators can provide you with, number one, cycle information, two, relative price movement, and effective price levels where the market has traded high volumes at price. So those are areas where there's large amount of interest and there's perception of value at a price point. As part of this presentation, we're also going to cover how to manage a trade and also qualifying factors for entry. To manage risk or control, we have something called the channel SD, which is a standard deviation channel that provides us with support and resistance levels. This is based all on market volatility, and they self-adjust to market force as visualized with a volume force bars. So here's one thing that we'll look. So at traders, what do we do? Well, the first thing when we start trading and looking at charts, we understand two things. We understand time, or horizontally, and up and down we understand price. And visually we can see, like from this chart, the price is movement that's moving to a newer high, and then it's made a corrective pattern to the downside. Price changes with passing time. Now, one of the things that if we extract time out of the movement of price, we find out that volume is indifferent to time. Volume can move price and change magnitude of price, but that is a force at a specific period of time. And I'm going to show this as we go through the demo. So key thing, volume drives price. It is the force that moves the market. Secondarily, if we want to visualize the market, what are the tools that we have? What we have is bar types. And a bar type can help us to visualize market in specific manners. On the left side, we actually have a chart, and that one is basically time and price. On the right-hand side, we have time and price, but that is actually a range bar. So to a certain extent, we can extract certain factors or dimensions by using visualization tools. And bar types are one specific thing that we use for that. As part of that, and this specific one, if you were to look at the bottom, you see that just volume. So this is just a volume chart. So the volume chart, what you can see is that it is moving price. Not all bars have the same magnitude, in other words, height. So basically, what you can basically understand from this is that the same amount of volume, and this is a measured volume, I believe it's 2600, it can have different effect on price. In some cases, about the 920 time frame, you see that basically price is actually locked. There was a sideways movement. Then there's a thrust and this movement to higher levels. So you can see by using force of volume, you can see when the market actually stalls. So it gives you a better visualization. You can infer sentiment of the market players. So we start looking at different things. We go, and this is the key thing for me. So we have something called volume force. And volume force is nothing more than having a bar where the key input in that bar is a volume. Now, how do we change this? You know, in other words, we want to know when the volume has increased and there's a breakout to higher levels. Or we want to know, that would be continuous, or we want to know when there is a pullback. So the bar itself, what it does is establishes a value. This value is 2981. When it reaches that value, and this will be further explained tomorrow with some more graphics, this value, when it creates it, in other words, it goes 2981, finds the high and the low. When it's exceeded on the high by 10%, it creates another bar. If it goes 25% amount below the low, then it basically pulls back. So basically, this can allow us for a better view of the market. If the market is trading within a range, and there can be volume within the high and the low, and volume can continue to grow. And at 1026, you actually see a bar that is actually in blue. It's the highest bar you see. And that particular bar is in essence, it doesn't have a lot of magnitude. However, it stayed there for a long time, enough to use 4 times the amount of volume that most of the other bars had used. So basically, when there's a stall, we can actually see that easily with the volume force bar. When I trade, this is basically the indicators that would be used. Cycle force, market force, channel indicators, and we're going to cover all this in the demo part. And those help us to visualize the market and to look at levels where we can actually have a trade. In other words, we have either a bullish or bearish bias. I wanted to just basically spend most of the time on the demo side, because that's really the key thing that we want to look at. And let's go on, and I want to put screen sharing right now. And you should have an image there. It's shared to all the, okay. What we have here is a visualization through different bar types of the same symbol. The yellow marker that you have there, and you can see there's a yellow arrow, and I'll move that. There's the arrow right there. At that point in time, the indicator, which is the volume force indicator, was able to ascertain that there was a bullish bias in the market, and it draws a little bar. Well, basically, it's a little high-low bar area is encompassed, and the high of the current bar and the previous bar is marked in. If it's a bullish bias, it's in green, as it is here, and if it's a bearish bias, it's in red. That tells you the high and the low that generally should be broken for validation of that trade into a bullish or bearish bias. You can see that basically you have different effects and different type of information showing across most of the bars. Because basically what you're doing is you're visualizing the market through a bar type. So what I'm going to do now is I'm going to actually show something else here. And I'm going to put the same thing. You've seen basically many bars now. Now let's go ahead and just look at a volume bar. This is 3,413 volume, and there's a volume marker on the bottom that shows the same level all the time, 3413. But you can see where there are areas where either price is stalled or there's a thrust bar. This is that particular one right there. The same amount of volume was able to move price that much. Moves up, Same amount of volume now pulls back, and in some cases, like this 2 bars right here, you actually see hardly any movement, strength at all. Now, if we go over here, the green line right there, there was a thrust bar right there. The indicator actually was able to pick up that there was a change in direction and strength using a specific number of qualifying factors. So the qualifying factors are weighed, and then it paints the bar for you in a bullish or bearish bias. In this case, what I have, this particular one, only has the um, the trend guide XP9, which is 9 specific qualifying factors, and it basically shows you a demand, a little box for demand, and a little box for supply. So you can actually see basically whether it's either a bullish bias or a bearish bias. Now, this is looking at volume. Now, let's go ahead and visualize the same information, but this time what we're going to do is we're going to look at it with a volume force bar. And the volume force bar, this is the same information there, but now you actually tend to see areas where there's actually a little bit of consolidation, thrust bar, another bar, and you actually can see the pullback. Now over here in this area, you actually saw green. What is that telling you? Well, there's a possibility of another thrust or bullish bias, another rally to a top side. Let me go and show just something here on the data series. So that bar, for it to continue, it basically takes 10% of the value, 341 contracts above the high established after 3,413 contracts went through. And then if it goes 341 higher, it creates a new bar. If it pulls down by 25%, then it will go ahead and put a bar, which will be a reversal bar. It will be basically going against the trend being in this case up. And you can see that here, here, and then actually bullish bias change right there. So this is just another way of visualizing data. On the bottom, in case you have a question, does AMA better volume? And the only reason for that, having that there, is just to actually be able to see whether how much volume is actually in every specific bar. Because even though the bar is created by default with 3100 volume, it has different magnitude when it measures volume. The amount of volume basically that's forcing the bar to movement is different. The reason for that being is that it made a high, it made a low, but then it traded for a long period of time between high and low before either breaking out with a 10% higher volume across above the high or pulling back with a 25% volume amount below the low. As you go through this, post the questions and we'll go through that. Let me go ahead and change now to another workspace. In the workspace, I'm going to just ask a question, and basically has to do with when you do analysis, and this is actually, of course, is using the volume force bar, and we have the volume force bar, we have a number of indicators, we have a number of cycle indicators, and we have volume at the bottom. So what do we actually find here? What you find here is that there are actually 9 different qualifying factors that you can extract out of this view, out of this chart right here. What are they? Well, slope of the cycles being these 3, minor, intermediate, and major. The slopes of volume at price, which volume at price is generally defined as the point of control. There's a little marker for that there. And thirdly, the relationship of that point of control against the cycles. And you see the 3 cycles here, major, intermediate, and minor. Now the question here is, how fast can you make this analysis and react to market conditions? I can tell you that that is actually a big challenge, and doing that is not easy, nor can it be easily done. So you figure out, well, what can we do? Remember I said qualifying factors. So what if we take those qualifying factors and code those qualifying factors into specific indicators? Indicator number one, trend guide XP9 PB paint bar. And it paints the bar high green when there's a bullish bias. In other words, the qualifying factors are met. And the little pink here is actually weakness, but it doesn't qualify as a factor. All the qualifying factors are not met. So we have four colors that we use here. High green, bullish bias, high red, bearish bias. So the question would be now, how fast can you make the analysis now and react to market conditions? And of course, the answer is just given. It's much, much faster. What are you looking at? You're not looking at six things. You're not analyzing the slope of six items and the interaction between them. What's the relationship with them? What you're looking at now is just the qualifying factors giving you a single output. Everything is being calculated. It says, okay, here's where we have a qualifying factor bullish bias or bearish bias, or basically a holding pattern, which is the yellow and the light pink. So if we go on, we continue to build on this, and because basically you start with one idea, and the idea may be visualizing the data. Then you take the qualifying factors and you add them in there. And then you add the final product, which is in essence what is something that you can purchase today. So what do we have here? Well, we have a number of things on the top side. We have the paint bar, the XP9 paint bar, using basically looking at those 9 qualifying factors. Then we have the one that's called DS, which is demand supply, drawing the little boxes to match what the color of the bars is. Then we have the confluence IMF, and the confluence IMF are levels of price at which there was a very high volume historically. And we're looking at this over a year back. And we find all these levels, and those are levels where you can have resistance and support. You can see the two different colors. They are being drawn, whether you actually have resistance or support. The other thing that we have there in a little red markers, let me go ahead and pull an arrow right here. Okay. Make sure we disable the snap mode, otherwise we can't draw anything. That's the point of control on that bar, point of control of that bar. So the point of control is being drawn on all the bars. So visually, you could also say, well, I'm looking at the point of control and the slope as it's changing, going up or down. That is the point at each bar where there's the highest amount of interest to trade at that price level. So we're looking at that. The other thing that we have here is the Ranger bar. So if we're looking at the bars here, basically we can ask this question. The question is, what is the value of each bar? How many ticks? The answer is actually on the bottom right corner. It's actually drawn right there. The value of the bar is 10 ticks. So if you're looking one bar against you from when you entered, and you enter at a high level for some reason, then you know that if it goes to the bottom of the bar, it's going to be 10 ticks generally. And so it helps you to manage risk by looking at the Ranger bar. So the trend guide XP9 MTF, that is a key item. And I'll explain why. When I look at data, and this is just single indicators that's looking at well, actually, in this case, it can look as many as 4 time frames, but it generally looks at 3. If we go back and what did I mention? I mentioned that volume drives price. There are 2 ways of looking at the movement of price. One of them that I use, one of them is by looking at volume, the other one is by tick. And they both infer the movement or the force of a volume. So we have here a multi-time frame indicator that looks at the time frame number one is a volume value, and that is statistically found by running basically an analysis tool once a month, and is published to the folks that buy the software. And this is set once a month, and you trade through the whole month, volume 4580. Uh, this is actually calculating using tick bars 1227, and the second one is tick bars 3666. So we're looking at 3 time frames. And the way this works basically, you can paint it on the oscillator on where the indicator is at, or you can actually do this. You can click on all, you can click on OK, and now what I'm going to look for, it's going to take a little bit before it paints. When I have one of those green boxes, I want to make sure that it matches with one of those racing stripes. If there's a racing stripe and there's no box, I don't trade. If there's a racing stripe and there's a box like it was right here, you actually have a nice bullish bias. So they have to match. Now, generally what I suggest doing is to do this. And I know you have to look at two things, and there's other tools that you can use to actually um, show, in other words, make them both match. In other words, the XP9 and also the multi-time frame factor. So if I see a box, as I do here, I quickly can look down and say, okay, that's a valid, because across 3 time frames, it's also validating that those 9 factors, qualifying factors, are in agreement. So basically, the reason for having something called 9, XP9, XP9 means that there are 10 parameters that are analyzed to provide a single output. And this is done in this case across multiple time frames. Instead of just looking at a single time frame, which is what we're looking at a bar type visualizing data. But behind the scenes, this indicator is looking at volume bars, tick bars, and it's telling you, are they in agreement? So basically we have agreement of the current bar type that we're using plus 3 others. There are 4 items that actually are in agreement. Is that a higher probability that you could have a positive outcome? Well, in time you can test this out. But I propose that by looking at the multiple time frames, specifically now 4, you have a higher probability of having a positive outcome. The other thing is when you have basically um, a signal. Where's T1? 89.75. Where is T2? 96.50. Now those are not absolute levels. They can be 3 or 4 ticks above or below. How is that managed? Well, that's managed through the sensitivity of the Confluence Internal Market Force Indicator. And you can actually have it use point of control or VWAP or both, which is what I did here. And it actually finds those levels at which price was in agreement at point of control and VWAP in time, as historically it looked at that. So now let's jump to another. Uh, let's see now. What I'm going to do now is I am going to actually place here a chart. We're going to look at 4 charts. The first one we're going to look at is the ES. We have already looked at that. I put the information there on the qualifying factors. That's there. And I'm going to introduce one other product because it helps me with analysis and basically to visualize this in different ways. And I'm going to actually put shark indicators, bloodhound, and I have a template. And the template is going to be put in there in a second. It's called the volume force trader. Now you don't see any markers right there, but the volume force trader have a number of, I can actually show you certain things. If the support and resistance, basically the standard the SD channel is broken, it's going to show me now. Let's go ahead and reload data. It's going to show me when there was above the channel and below the channel. In other words, did it break out or is it pulling back? So it paints us bullish bias, bullish bias. Over here, there was no agreement, that particular one. What else can I do? Well, now let's go ahead and just look at the XP9 DS. And then there's the signal right there. And I can go and now look at that plus the channel, so I can aggregate bearish signal. If I look at the opening range now, opening range and any signals there. Also with the time session. So it allows me different ways of looking at the same data and looking at it fast. So now that's the ES. Let's go ahead and look at the Nasdaq. And in this case, what we're going to do, instead of doing it that way, we're going to just go ahead and extend the actually the racing stripes, and we're going to paint them all. And we will look for agreement of the box along with the bar. So there's a signal there, long at 11:55, and you can, let's see, next one, there's a red one right here. That one was a short one, didn't do much. Then there's another one, green right here, and matches. So across the three multi-time frame analysis of the XP9, that it was an agreement. So what are we learning from this? Well, basically, we can visualize data and we can analyze quicker by using a qualifying factor type indicator. So this is the same thing now. This green right here across, valid signal at the breakout there. That's your entry point T1, T2, T3 by using the confluence indicator. Where is, if you enter right here, where is support? Well, support is right here. And so your exit would be somewhere about 1340.41 or below that. So that it allows you to visualize things a lot easier, and not only to see what the targets could be, but also to minimize risk. I'm going to pull now oil in there, and I'm going to add an additional indicator to it, which are all part of the package. Let's go ahead and do this. What I'm going to do in this case is I'm going to put in here the standard deviation channel. Opacity shading, let's go ahead and change that to 60 so we can actually see a little bit better. Okay. So now you see the when there's resistance on the top, red, and green on the bottom, it draws dots, the yellow dots. That's telling you that you're actually range bound. And so you have to break either from the top or to the bottom. And you can see, like over here, actually, let me bring this to the front. Right here, price actually broke through, and that signal actually was generated. So in essence, you can actually see it's almost like a stop and reverse type of a system. If you have red on the top, basically you're in a bearish bias. If you have green on the bottom, you're basically in a bullish bias. An example of that is also right here. Did it match on the bottom? Yes, it did match on the bottom across the multiple time frames. So the time that I spent was basically over the years, you find qualifying factors. The qualifying factors become an indicator. The indicator then can basically mark the bars for you. So you can be looking just at the price bars primarily and get an idea as to where you are as far as trading. So let's go back and go back to the slides. So this is the special promotion that I'm having. First of all, I believe there are close to 32 indicators, and that's the iCinDER Cycles Market Force, which is every one of our indicators, and there are different ways in which you can trade those particular ones. The one that I'm promoting today, which is what you've seen there, is the iCinDER Market Force Pack. And that particular one has basically the support resistance and SD channels, the V2 bands, the XP9 multi-time frame, which is a key thing, then the volume force bars plus, and also has the XP9 paint bar, PB, and DS, demand and supply. The bundle price of all those is $10.95, but today only through the next few days, it's actually going to be $7.65. The other thing is the periodicity guide subscription, which is 1 year. That's a value of $160. The first 3 days of the month, I run an analysis tool. The analysis tool then generates based on the symbols that I follow, which are basically currencies and a number of the futures. It generates a value for standard deviation, which is the noise level. It generates a value for the bar size that you should be using. And that is actually what you place in your volume force bar. So those are the tools that are available. In essence, there are 16 indicators, one bar type, a sell style, and also a subscription. So the second or third day of the month, by the afternoon, you'll be getting the information basically for the numbers. Also, what I do is I create the symbols that I follow, which is oil, Nasdaq, ES, gold, and YM, and bonds, and note. All those, I go ahead and I update the workspaces, and I send the workspaces to the customers. So basically, there's an update install, and you go and run that update install, and you have basically all your workspaces with the correct values in them. So you can go to the store there, and you can actually go ahead and see, well, place the order based through there. So that's what we have for today. Now, I'm going to move the slide from here. The other thing is there's another webinar tomorrow. Juanita, if you don't mind putting that link in, okay, it's there actually, the follow-up webinar, which is tomorrow. So you can just go ahead and use the link and sign up for it. Tomorrow we're going to go more in depth with this, but we're also going to look at the live market. And as we look to the live market, we're going to go through setting up the workspace, setting up one chart, going deep into what indicator tells you, because they tell you something by measuring something else. And so we're going to see what the output is and how that ties into the analysis of the market. So now, if there are any questions, I would like to just go ahead and move on to Q&A. As an aside also, the other indicators that were used here is the volume force bar suite, NinjaTrader volume profile, and AMA better volume from Lizard indicators. At this point, questions? This is actually for NT8, Greg. The product, uh, the XP9 suite was originally written on NT7, but when I moved to NT8, I had basically additional features that I could call upon, and that's how the multi-time frame piece came. It worked a whole lot better on NT8, and it was easier to code. The promo active is through Sunday, really. Uh, if you attend tomorrow, it's still, the price will still, I'll still, go ahead and honor that price. And you'll be able to basically make a decision tomorrow or the day after once we go deeper into this and how the tool can help you visualize data and make quicker analysis of the market movement. Any more questions there? Now, if you have any other questions, really, you can contact me. And uh, let's see. I guess that did not show up there, but it should be support. I'm going to just write it down. If you send email to me, support at iCinDERtrader.com, I generally would answer within, 12 to 14 hours, depending on what volume I have of questions. But we can even have a chat one-to-one as to the fit for the tools in your specific trading environment and specific needs. If that's all for today, I'll turn it back to Juanita. And first, I would also like to, again, thank you all for um, joining me today. Thank you also for NinjaTrader for the opportunity to address a good number of their customers and for this promotion of the tool set that I have for NinjaTrader 8.
Thank you, RJ. I want to give a special thank you again to RJ of iCinDER for a great presentation today. Everyone in attendance will receive an on-demand recording of today's event, and we hope that in the future you do attend these on a regular basis. You can also review the following schedule for upcoming events. We'd like to remind you that the information provided was that of iCinDER and not of NinjaTraders. All information was for educational purposes and should not be construed as trading advice. Again, we do appreciate the time you spend with us, and we hope that you have a great rest of the day. Happy trading from all of us here at NinjaTrader.